We have some bad and good Tesla stock news today, and the bad is actually bullish long-term based on hard data that you can't argue with. And later in the video, I will also go through all of today's Tesla stock news. The bad news is that Barclays analysts downgraded Tesla stock from buy to now hold, but he increased his Tesla stock price target from $220 to now $260. He was just on TV, so let's dive into that first.
Joining me now is Dan Levy, Senior Autos Analyst at Barclays.
Immediately, I have to interrupt. He is an auto analyst, and do you think that Tesla is a car company? Do you think that Tesla should be evaluated and analyzed by an auto analyst? By the way, I like this because this extends the Tesla stock buying opportunity, so I'm all up for auto analysts actually analyzing Tesla stock.
We've been bullish on Tesla. We see them as a long-term winner in the industry's transition to an EV world. We acknowledge that there's more to Tesla than just the automotive story. And even from a more, call it midterm catalyst path, you have Model 2, the push to mass scale coming late 2024. But I think the view on the stock was that there is still a more challenging near-term fundamental setup as far as finding the floor and margins. Inventories for Model 3 are still somewhat elevated. There is still some concern that you're going to have further price cuts. And with the run in the stock, we thought that the stock was dismissing some of those fundamentals, hence the move to the sideline.
There's actually one very good and strong reason to believe that him changing his Tesla stock rating from buy to now hold is actually very bullish. Let me explain. We need to look at his track record. First of all, he's only right 35% at the time when it comes to Tesla stock price prediction, so there's actually a 65% chance that he's going to be wrong anyway. And then, of course, the average return for his Tesla stock ratings is minus 53%, so not impressive at all. But here's what's really interesting. He said sell Tesla stock at the time when you should be buying as much as you possibly can, and then he said hold Tesla stock when you should still have been buying, and then he finally said buy Tesla stock, basically almost the moment when it would have been perfect to sell Tesla stock, and now he changed his rating to hold. And my reasoning would be, if he changes his rating to sell, that would be extremely bullish, and him changing his rating from buy to hold is actually more bullish than bearish. Look, he seems like a nice guy. I'm not attacking him personally here. I'm just looking at his ratings, and that's what my conclusion would be based on this data, not opinions, data. So while on the surface, seemingly his arguments make sense, when we look at the data and the history of his ratings, yeah, this is actually bullish, not bearish. It does not guarantee he is wrong, but based on the previous data, the chances are he is wrong.
Is there a glut of Teslas right now?
Based on some of the data that we've seen, there is elevated inventory, especially for Model 3. I think the concern is that you have on top of this capacity ramping at some of their other facilities, Austin and Berlin, and that as more of this capacity comes online and you've seen competition from other automakers, this could spur further discounts and price cuts from Tesla.
We need to talk about Tesla's inventory. So yesterday, Tesla's inventory dropped a lot according to this chart. However, Troy says that these charts are not reliable anymore because Tesla changed something, and therefore these charts cannot have reliable data to pull from to reflect reality. However, the owner of that website says the charts do seem to accurately reflect what Tesla shows in their inventory. I and many others are seeing very few or zero new Model 3s available within 200 miles when I look at Tesla's inventory directly. Hard to tell the exact cause for now. What is a bit strange is that every single model dropped by quite a bit, and Europe also saw a big drop. Although in Europe, Model S's and X's did not drop at all. They remained pretty much the same, but the Model 3s and Ys, yep, looks like they do have lower inventory now based on this data in Europe. And Troy says because there was a big drop in a few countries in Europe, and there are big changes with the Model S and X2, it looks unlikely that the inventory actually dropped, but looking at Europe, the inventory level for Model S's and X's did not really change much, so I would like to push against that argument a little bit, although I think Troy is closer to the truth here. And then he continues, they used to avoid duplicates per delivery location, maybe it's now per state or country, and I think that could be a pretty good explanation, actually. One more reason why I think Tesla changed something about their website is because when we look at Tesla's inventory discounts, they have just been increased from 10,000 to now 15,000 for Model S's and X's in Canada, and for the Model 3 in Canada, it is up from 2,500 to 3,500, as you can read here from Drive Tesla Canada. The US, they say, also has some similar discounts. So if the inventory indeed is super low, why discount all of the vehicles so much? Unless this discounting is what's driving Tesla's inventory so much lower, but I don't think that's really the case because this story was reported after we saw the inventory levels go down by a lot.
The shares are down 5% today. Do you think they can hang on to the doubling that they've seen year to date?
Our view on the stock going forward is we fully recognize that there are other non-automotive components to the story. We appreciate that the stock is getting a bit of an AI bid. And, the opportunity near term is that you may potentially see a bottoming of margins on the second quarter. We think that as far as deliveries go, you're going to get the deliveries release in the next week and a half. We're actually somewhat ahead of consensus on that. But again, I think that it's important to be mindful of the fundamental setup, especially as it relates to margins.
Yeah, and what about the valuation? 75 times forward earnings or something like that. You're raising your price target to 260 above levels from here.
Well, based on that price target, Tesla stock will go up about 50 cents. In the next 12 months.
What are you valuing the shares on?
Our valuation is based on our long-term 2030 outlook. We think that by then Tesla can be, comfortably north of 6 million units. That makes them the number, call it 5 or 6 automaker globally. We have them holding some margins. And then what we're trying to do is embed some upside optionality in there. So we feel that the valuation is mindful of the path that they're going toward with some upside optionality as well, which we think is quite necessary. But at the same time, if you look at the trading multiple, this was a stock that was trading at just under 30 times EV to EBITDA as recently as late April. A lot of the feedback we got was that the 1Q earnings call was quite negative. And in the span of the last 6-7 weeks, it's gone to well over 40 times EBITDA, really off of sentiment with little in the way of change fundamentals. This is actually a sharp contrast to some of the other AI names we've seen, like NVIDIA, where you've actually seen multiple re-rating alongside positive earnings revisions.
Well, actually, there are a few pretty big arguments to be made that the fundamentals change a little bit positively in the last few months. Number one is Elon Musk is now going to be focused on Tesla a lot more because Twitter has a new CEO. That is huge, and that is fundamentally better for Tesla. Number two, some like that Tesla promised to start advertising, and Tesla never really made that commitment before, although Tesla has not really started advertising in a major way yet. That expectation is there, and I think that is a fundamental shift there. And if you expect Tesla to advertise, then assuming that the campaign will work, prices of Tesla vehicles should stop dropping. If anything, they are more likely to increase than to drop further, which would increase the margins, which would increase the earnings, which would increase Tesla stock price. But the most hilarious part here is that he only expects Tesla to sell 6 million vehicles in the year of 2030.
You mentioned that AI has been, to some extent, a driver of the stock, but there seems to be a lot more risk around Tesla's use of it, specifically its full self-driving capabilities, where it seems like marketplace demand is not that strong right now based on some of the prices of used Teslas that come with that equipment, where they're really not getting much of a valuation boost from it. The consumer may not be valuing, and more importantly, regulators may clamp down. They actually have had a pretty hands-off approach so far, but as we've seen with crypto, that might not last forever.
Yeah, the approach on FSD is actually quite different from what we've seen other automakers taking. Tesla takes essentially a brain and eyes approach. There's a lot of cameras, and then there's a computer that's doing all this. So it's a very vision-based approach. Other automakers are trying to use other sensors and then the push to completely full self-driving. You've seen other automakers using other sensors such as LiDAR, embracing radar, and also using maps. So it's a very different approach. We've characterized the Tesla outcome as binary. It could be a spectacular success, but it's also not very clear that it could be successful, especially as it really is a contrast to the other automakers. Near term, the uptake rates on FSD have been maybe somewhat more limited. It's more of a US story. And if you look at actually some of the third-party data stacking up Tesla's system against others, there are different reviews on where Tesla's system stands. They do have clearly an advantage. They have a lot of data out there. They have a large fleet of vehicles. But the technical approach, it's still unclear if they're the long-term winner on this.
A few years ago, Elon did say that no question FSD should be viewed as reasonably valuable when doing a trade-in. However, this is a pretty recent email, which seems to be about 2 months old, and a Tesla representative says that FSD does not change the value of the car. So there certainly seems to be a little bit of risk here. But I completely disagree with this analyst's assessment that it is very binary whether Tesla will solve full self-driving or not. It will be either first or everyone else is going to basically beat Tesla. Tesla moves extremely fast. So let's say in a very unlikely scenario, going with only vision approach is not a good idea. Tesla moves fast, so Tesla would be quickly able to catch up with everyone else. In that case, of course, FSD would not be as valuable to Tesla as it would be if Tesla just solved it with pure vision. However, it will not be zero added value to Tesla stock. I think it would still be a substantial addition to Tesla stock. And now let's go through the rest of Tesla stock news. Tesla started a new Twitter handle, Tesla AI, and interestingly, the Tesla AI team is visiting Vancouver, actually. This is where I live, so maybe I should go. And we have really good news here. Sawyer tweets that Tesla is starting production of Dojo next month, which is designed by Tesla for computer vision, video processing, and recognition to train its machine learning models to assist its autopilot advanced driver assistance system. As you can see right here, this is based on the tweet from Tesla, start of Dojo production in July of this year. This is big news actually, although I don't think many people will really notice this. Drive Tesla Canada is reporting that Tesla is reportedly interested in buying a wireless charging company which is based in Germany, which makes it more interesting. Plugging in your Tesla at home is pretty easy, although if you are new to owning an electric vehicle and you forget one time, oh, that's a bit annoying. So a wireless charger would actually be pretty useful, although you would lose some electricity in the process. For example, this article, although it is 3 years old, wrote about an experiment where one phone was charged directly plugging in the charging cable into the phone, and the other one was charged through wireless charging, and charging wirelessly consumed 47% more energy. The technology, of course, is getting better, but there is a limitation. If Tesla can innovate here, that would be a nice luxury to have. We now have some feedback on the first imported Tesla Model Ys from China into Canada, and this person says, I can absolutely confirm this is the best fit and finish Model Y I have ever seen. Panel gaps are perfect. Hood, doors are spot on. That is, of course, really good news. This is something that I would call as possibly not good news, although it could be absolutely nothing. There is some confusion about what the actual numbers from China were for the last week for Tesla. Some say it was 14,500, but some now say it was 13.6 thousand vehicles insured in China for Tesla. The person that provides this data says that he himself does not know what is going on exactly because no one is showing the original source, so it's a bit difficult to tell what's going on exactly, but there is one pretty good comment. which says, not sure where you saw this, but maybe the 900 vehicle difference is made in China Model 3 and Ys only versus the total Tesla insured vehicles, which would include imported Model S's and X's. That sounds like a pretty good explanation. But if you want to be safe, just go with the lower number. Either way, it's not a big difference, so I don't see this as a big deal. Interestingly, Ross Gerber just sold 60 shares of Tesla stock in his ETF. Only 60. This is a funny story. Lucid CEO doesn't think that they should really switch to Tesla's standard, and he says that priority should be put on ultra high voltage charging, so it doesn't seem like Lucid is going to make a deal with Tesla, which is going to seriously hurt Lucid. This is another ridiculous story. The CEO of Ford, Jim Farley, says if he, Elon Musk, wants to design a Cybertruck for Silicon Valley people, fine. It's like a cool high-end product parked in the front of a hotel. I make trucks for real people who do real work, as if Cybertruck was not designed specifically for that, because, you know, you can grab a hammer, swing at the Cybertruck, and it will barely do anything. How can you say this is not going to be a tough truck? Cars.com announced this list today, which shows the most American-made vehicles that are sold in the US. And guess what? The first 4 most American vehicles are all Teslas. Then there's a Honda, a Volkswagen, and you don't see a single Ford or GM vehicle in the top 10, which is interesting because they pride themselves on being American, and yet I don't see any of their vehicles here. If you are buying a Tesla vehicle, it is now a little bit easier to know exactly how much interest you will pay, because Tesla just shows you, based on your credit, what kind of interest you can expect to pay. And a bit more good news from China. It seems that this is becoming official, that China is going to extend the tax incentive for new energy vehicles, which includes hybrids and EVs. A quick personal update. I am scheduled for dental surgery, not this Friday, but next Friday. And they are going to surgically remove 2 of my wisdom teeth at the bottom, which are growing horizontally instead of vertically. So yeah, I will be fully sedated for that surgery, and I may need to take a break of I don't know how long, but that's coming in about 9 days. They said they would need to remove part of my bone, which made me a little bit uncomfortable. I was a bit nervous, but after talking to the doctor, I feel reassured. I think it's going to be just fine, although I will be out for a little while. And YouTube wants you to watch this video next if you haven't seen this video about why Tesla board members are now buying more Tesla stock. Then watch this one. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.